Too much optimism? Here to react now are Michael Cugino. He's president and portfolio manager of the Permanent Portfolio family of funds. And Jamie Cox is a partner at Harris Financial Group. Welcome to both of you. Jamie, I'm just going to start with you. Remind me, I mean, are you bullish on this market, cautious for the near term as some now are? What are your thoughts?
Well, I think there's going to be a two-tiered, speed to this recovery for stocks. I think, you've seen over this past year 2020, you've seen high-flying tech stocks. You've seen stocks that have completely run away with it. That's not going to be the story for 2021. So I am not necessarily bullish large-cap tech and some of the things that have already run, but I'm definitely more bullish dividend growth, some of the things that are going to pick up the pace as the recovery starts to take hold. We're in a vaccine-dependent, recovery. And as the vaccine begins to get distributed here in the United States and around the world, we're going to start to be able to figure out just how fast some of these beaten down sectors are going to recover. Airlines, banks, all these things that can't be replaced by technology. Maybe banks can, but airlines are difficult too. These are sectors that have been just absolutely hammered. And I can't wait for these particular companies to recover. And I expect 2021 to be that year. So for those particular companies, very bullish, but not necessarily for the Amazons of the world, which I think will be funding sources for some of this rotation.
Michael, let me ask you, and Barry Bannister of Stifel was out with more of a cautious take on the market today. He has about a $3,800 price target on the S&P. Is everybody who is saying, because of these preconditions, stocks will continue to perform well, ignoring the fact that a lot of these gains might have been pulled forward in much the way that a lot of the acceleration of this economy has just been pulled forward into 2020?
A very legitimate point, Kelly. I'm in the camp that in the short term, and probably into the first half of next year at least, you are going to have good stock performance. You got great comps going into next year. You have the vaccine, coming online, the post-COVID pent-up demand, all of those factors that would be the sort of sugar high for economic growth getting back to normal. That's going to be the story for at least for the first half of next year. Then it gets a little bit murky. And there's just a lot of risk factors. I mean, investors right now are hit with so many. I don't remember a time where investors have had so many simultaneous risks to their portfolios and their long-term investment strategies and what they're seeing now, whether it's health, employment, trade, politics, economic activity, changing dynamics of how people are going to do.
And yet the market's loving it. I mean, Michael, that's what's so fascinating about this is you're absolutely right. You throw everything at this market, and the Nasdaq's up 40% this year.
Well, to some degree, there's nowhere else to go because the Fed's on the sideline. Capital is cheap. Real interest rates are negative. And you do have a bifurcation going on where people are definitely trading the current environment, the COVID stocks, the shut-in type scenarios, tech. Jamie mentioned tech and some other industries. Those have all been winners. And then the cyclical side of things has really not kept up until recently. Now, you would expect that as the economy recovers, those things are going to start to advance, and they certainly have. And that's a trade that, the commodity cycle is in a multi-year trough at this point. That's likely going to increase with pent-up demand and resuming global growth and easy monetary policy. So you have a potential multi-year trade in commodities on the upside there, but that may take a while to develop. You also have, the issue of employment, the sustainability, and the breadth of economic recovery. Right now, it's been very bifurcated. Yeah. Going forward, you're hoping that broadens out.
Shepard Smith here. Thanks for watching CNBC on YouTube.